Hey, what's going on, everybody? I want to basically sit here and talk to you guys about trading multiple markets and why it's very important. I think a lot of the key factors that people think about, if they want to become a full-time trader, they just trade one market, kill it, smash it, and just, you know, just just go full time. Well, first off, 96% of people fail at trading, and two, they have to understand certain markets are more active than others. So, for example, I'm not having the best of time trading futures right now. Consistent, yes, but not making a whole lot of moves. A lot of the futures market makers are on vacation right now, and it's pretty well known during the summer there's a leave of absence and the volume is just not there. But the SPY traders, the option market makers, are always active. So that's kind of the interesting thing. And the funny thing about today is, I actually shorted the market SP 500 on futures, but the market came down here at this lower region. I had to close out the trade because all of a sudden a large options whale came in and bought it up, and that's where we're getting this bottom out effect. And pretty good chance that we're going to move up, 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 up. Because when you look at it from the daily, unless we take out that low very aggressively and it looks like we're just bottoming out, there's a very good chance we're just going to continue to move up higher. And I would realistically be targeting somewhere up in this region up here. I think we're going to take this level out and go. So I think tomorrow may be a position I can get in on a swing trade on futures. Not so sure. But let's say that, I'm actively shorting the futures market for whatever reason. And I want to take a different position in a different market. So I usually would go long equities. I never short stocks. It's just never been my thing. But if I identify a particular rotation, then I would get interested. So I just wanted to share like an example, even though I'm negative in the trade. And if I do go really negative, well, it's not leverage. I don't really care. And two, it's only $5,000. It's not a whole lot of money. But this is Tesla. And when you're looking at Tesla from the daily, very similar situation. Even though it's a NASDAQ index stock, if we came up, we took out this level, took out 940, pulled back, got in right around 916, even the market really pulled back. But now the daily candle is either going to close as either going to be hopefully at a spinning top head, and then the day will be kind of very bullish. Sorry, not spinning top, but it's turning green either way. And hopefully we could close a healthy green candle, and then we'll continue to push up. And my target is going to be right around in this upper region, around 1100 or so. So that's going to be kind of my target region if we could hold this. If we continue to come down lower, I'll just dollar cost average. $5,000 is definitely not my entire bankroll, but I will continue dollar cost average all the way down to 500 to 400. Then hopefully this will become a multi-month swing trade for a very decent large percentage gainers. And honestly, day trading is fine, but a lot of your hugest wins are going to be these non-leveraged longs. For example, I'm riding a potential 2-year swing on crypto right now, a very decent sized position. And I actually sold all my stock positions right a little bit around the Ukraine war. So even though I took a hit off my profit margin, I still came out, very strong on top. So I'm kind of looking for, even though like when you look at the chart just in general on a weekly or monthly, we are basically in a potential short range, or we're kind of in the halfway back long setup. So we could come back here and then just launch up. If we continue to come ladder back in this low holds, I'm going to be dollar cost averaging into here. But just in general, from the low, when you kind of look at it, it's at a 50%. So it's not too bad, honestly. So it's not the worst entry. But if it continue to pull back below 61, I'll dollar cost average and then either 2x my money in the long run, or just kind of wait it up. I have a feeling Joe Biden's going to make the Powell pivot basically on interest rates. So I'm just taking a small position and take 5, 5, 5 on the way down. So it'll work out eventually. I might be sitting this trade for like 6 months to 8 months, or maybe in a year, but we'll see. But that's the whole point of day trading, is so you can actually make consistent money on the daily minus your losses. But it's always good to either hedge your positions in other markets, or just counter the position. If overall it's a bull market, stocks always go up for the most part. So yeah, But yeah, if you want to become a full-time trader, I highly recommend is trading multiple markets, taking long positions, non-leveraged, dollar cost average huge positions, and day trade only a small amount of your portfolio, because that should only be more like a fun, just staying in the groove of things. But yeah, thanks for watching. Have a good day.